think if you ask most blue chip centric investors what they're looking for, they'd love to say things like really high proportion of recurring revenue, highly diffused investor base, which de-risks things quite a bit, really visible unit economics, retention rates that are high enough that the company actually publishes the numbers. In my experience, if a company doesn't publish its retention numbers, it's because they're not very good. But the fact that they put it out there, growing into different markets, demonstrated pricing power, gaining share of those growing markets, the products that universally are well liked. I think most people would agree those are things they'd love to see in blue chips. It's just that Xero was losing money at the time because they were pouring money into acquiring more customers. The economics of that were great because they were getting several dollars back for every dollar they spent in marketing. And so for that, they should go out and reinvest tons, and they did. The ironic effect is your losses actually get larger while your value add is getting bigger at the same time. Looks terrible on the income statement. Great if you're trying to add wealth and value. Eventually, that dynamic shifts as the business matures, and I feel like that's where Xero is kind of today, where the narrative has changed a lot in terms of perceptions around maturity, as it should. And I think it's a business that you get out several years and people will look and say, oh, Xero's an obvious blue chip, for all the reasons that I just mentioned. And at that point, you'll see what probably will be a very pretty looking income statement. But investors who just hold out for, oh, I only invest in large established companies that have been around a long time, showing a profit, well, AMP would have described that for a lot of investors. But you really need to focus on, again, underlying economics and market opportunity. Yeah, we're still big fans of Xero. We still own a big chunk of Xero. I think there's still really long runway ahead. I think recently Intuit raised prices by a good measure in the Australian market, which validates that their strategy is just kind of salt in the earth, wasn't working, and that they'd have to change. Xero's pushed through some pretty good price increases, which I think reflect the value add of what they're doing. And I think all the mess with MYOB bouncing around from one private equity owner to another is just a huge distraction from them, on top of all the difficulties that you face going from disrupting yourself, multiple code bases and all that. So, it's certainly been on a run. It's been cheaper at points in the past couple of years, but it's still, we think, an exceptional business that has a really good long-term future.